CPI report. We're going to say, why is crypto pumping? And we got the most important charts you need to pay attention to. We're breaking it down. We're looking at altcoins. We're looking at Bitcoin. And we even have a special guest with us today, flown in this morning. How are you doing today?
I am doing good. It's been a long time since I've been here. I've got to kind of remember how to do this, but looking forward to it. It's going to be fun. We got a green day. Market's moving good. CPI, I want to say, hit the lowest we've seen in about 3 years in the U.S., which is crazy. I'm sure we'll get into that a lot more a bit later. I do have a couple interesting things about things they didn't include in the CPI. It's great to get that number to pump our bags, but just remember, it's all an illusion. All fugazi, because they're playing numbers games all day.
It is all fake internet money. Well, let's look at the fake internet money before we get into the CPI numbers, everybody. I know a lot of people putting in your altcoins that are pumping today. It looks like Arrow's getting back in the groove. I think a lot of action happening. A lot of Arrow holders in the chat. All right, well, Bitcoin is pumping, everybody. That thing is up 3.5% today. Let's go ahead and hit refresh, 3.6%. And folks, we're going to see a lot of big movers in a short amount of time. Doge, I just wanted to highlight this. Doge is up 0.3%, but 2 hours from now, that thing's going to be a 7-8% pump. As soon as this slowly moves down on the 24-hour chart here, we're going to see some massive, massive green candles. Bitcoin up 3.6, Ethereum up 1.7, Solana now up 5%. A lot of people are trading Solana meme coins again. Roaring Kitty has Solana roaring back. TJ, what are your thoughts of Solana being one of the big winners after Roaring Kitty? Does that make sense?
Yeah, I think it tracks. It's some really interesting correlations if you look at where GameStop topped out versus the run Solana went on after that. Wouldn't surprise me at all if there were similar players involved. Obviously a ton of people. Hey, JT, shout out to you. Hey, got another TJ, JT. So would not surprise me one bit if you got a lot of those big money whale insiders, that are playing the meme stocks coming over to crypto meme world. We've got Pepe and, as far as for the week, Pepe and Floki, top two movers there. So it's not a surprise. We got Solana based stuff. We got Ethereum based stuff. It's going to be really interesting to watch this cycle. I previously was I wouldn't say I was anti meme coins, but I was definitely not as interested in meme coins. But now that they've got the compounding locked liquidity, that I think as the more time goes on and those liquidity pools get bigger and bigger and bigger with things like WIF and Pepe and some of those things, in a lot of ways, that almost takes us back to the cypherpunk movement of crypto. If you look past the memes and past the jokes, you've got never-ending locked liquidity that can't be stopped on a DEX that anybody can access, permissionless, and there's hundreds of millions of dollars of liquidity. So how that stuff gets built up over time will be fascinating as this next cycle plays out. It'll be really interesting.
Yeah, and if you don't know what TJ's talking about there's pools for trading pairs like Pepe and just say Ethereum, for instance, and I'm just throwing out a number here. So every $1,000 that is traded, they'll lock up one of those dollars, and that dollar is locked up in this trading pool. But then when you start getting into millions upon billions of trading volume, these liquidity pools just grow and grow and grow, meaning it's growing ETH or Solana on one side, and that ETH or Solana stack just keeps on continuing to climb, effectively locking them up forever in some of these contracts.
Gotta love some of these names. The guy says, welcome back, Truth Justified, but his name is DZ traded his link for a coffee mug with an app.
Yes. No, without an app, everybody. Everyone knows I do not sign in. I don't want my light bulbs hooked up to the internet. I don't want my fridge talking to my toaster. I feel like they're going to turn against me in the middle of the night. They know what I'm sticking in there. All right, Arrow is sticking it to the Bears, though. That thing is up 14% today. But when you look at almost every single other chart, it looks not quite as good. If we look at the 7-day, okay, pretty strong, bounce there. But on the 1 month, don't like what I see there. On the 3 month, though, maybe we're getting a little bit of a trend line. And I'm going to go ahead and say it. I don't think we're going to see Arrow below $1 too much longer. Maybe it dips below here and there, but I think now dollar is going to be acting as a very, very strong support. Let's keep scrolling. We got another big winner with Avalanche. Avalanche is up 7.7%. Near Protocol, nearly hitting 10%. That is up 9.3%. Fetch AI is up 6.6%. I did bring up Doge. I opened a long on Doge last night. We're almost about $500 in profit or so. Where are we at? 482. So I have the stop loss in profit. Anybody get a trade in last night If you got a trade in last night, let me know, what are you trading? Did you get in Bitcoin? Did you get in ETH? Did you get in Solana and Avalanche? You're going to be looking pretty good there. The biggest gainers, though, TJ brought up Floki. Look at Floki up 11%. Arweave is up 12%. BitTensor Tau, that is up 13.7%. Graph is coming back. Beam coming back. Ondo having a pretty good day as well. Ondo getting closer and closer to $1. But what about the losers, TJ? Is your bag in here? ZBEC, WorldCoin, Gate, Lido DAO. We're not seeing too much. Then it's, Pepe. Pepe's just kind of flat after its huge week. WorldCoin, TJ, I want to know what are your thoughts on here?
Wait, you said Pepe? Because I have Pepe is the top gainer. Oh, no, I was looking for the week. I'm sorry.
Oh, yeah, for the week there. I have a thesis on WorldCoin. Now, I'm not trading this, TJ, but I think WorldCoin at $5, honestly, a fantastic trade. I think this thing could potentially, I think Sam Altman, forget about fully diluted value. I think he can get this up to 20, potentially even $50.
Yeah, I mean, he's definitely really plugged in with that ultra elite community. You know, he's got the attention of the tech space right now. AI is the hottest sector. He's capturing everybody's eyeballs, which obviously is very valuable. Retinal data extremely valuable to people that want to track everybody around the world. So it's interesting. Generally, like you said, I'm not buying it. These type of projects that are very much, I would put a lot of the ISO 222 projects in there. They're very like politically charged, and it's all about, the insider elite kind of stuff. Those generally aren't as attractive to me as things with strong tech or strong community that we've already seen. Not saying it can't perform. Like you said, we've seen it already with WorldCoin. But you mentioned Near Protocol earlier, and that's one of those ones that I think it's top 20 now? Yeah, 16. That's one of those ones as far as a top 20 risk reward, I feel like is pretty good. It's already gone on a heck of a climb recently. Strong project, strong narrative, good tech. That's one that I'm always looking to accumulate when we get pullbacks and stuff like that. It also has a lot of really good people behind it that really keep attention on the project. So that's one that I'm looking at right here in this range. Right next to Chainlink. I've already accumulated enough Chainlink, but I think there's arguably better tokenomics on Near than Chainlink in the long term. So that's one that I'm watching in the range.
All right, Mr. Techno Goody, trying to trade my tears of sorrow for tears of joy. Need this bull market to get going. Well, Techno Goody, be careful with the salty liquids hitting your keyboard. It can make those keys stick. I have experience with that. Sam Altman was talking about UBI in the All In podcast. You also talking about, instead of a stable coin, stable proof of energy. We'll be trading energy in the future. And I can see him trying to implement some sort of WorldCoin aspect with that. So, I bet it's part of his long-term strategy.
You could argue with ESG and ESG credits and some of that stuff, we kind of already are trading energy.
Yeah.
It's kind of a, what's the word I'm looking for? Fictional version of it.
Yeah.
But, it's not real. It's very manipulated. But I do see that, especially when we start getting more decentralized computing, decentralized rendering, the energy cost is going to be very key. And I could see, that's what people say. Store of value is store of energy.
Yeah. Even Bitcoin is a nebulous connection a little bit there. So
you could say Bitcoin is trading energy, really.
Yeah. The more people use it for solar flare, or not solar flare, but oil flaring, gas flaring, that is a move. All right. Well, speaking of a move, GameStop took a massive move to the downside. Let me move this to the right just a hair there. Now down 31%. The hedge funds do not like losing money. The hedge funds want to take you out. And folks, the 130 stream I'm going to do today, I'm going to do a deep dive with the help of Cancel Loco. We're going to use a video that he just really explains everything. The billionaires behind everything, what is going on? What is their daily fees? And, what is their motivation? And did they even close those shorts from years ago? A lot of information is going to be exposed at 1:30, so make sure you have on notifications. But yeah, now down 35%. If we look at the 5-day, we had a nice peak up to around $64. And so now we have bled out about half of our gain. So you know what? I'm rooting on this one, though. I am still rooting on GameStop. We got to stick it to the hedge funds.
Real quick, George Martinez was asking some of the new projects I like for this bull run. We need to jump into these CPI numbers, but a little bit later in the show, I'll share some of those. They're not exactly new. I'd say they're new-ish. They've been out a couple of years, but part of where I've been recently has been playing with some of this new DeFi stuff. And let's let's get through some of these CPI numbers, and we'll come back to that a little bit later on, George.
All right. Well, CPI inflation data is meeting expectations. Bitcoin hit 64K in response. In line with the forecast, Bitcoin climbed sharply following the announcement and following their data. So what was the data? Let's do the quick take here. Showing that the anticipated inflation data aligns with the market expectations, declining slightly from the previous prints. Headline inflation year over year came in at 3.4%, and core inflation came in at 3.6%. But what were we expecting? Well, month over month retail stagnated at 0%, well below the 0.4% we were expecting there, likely to quash any prospects of rate hikes in the near term. And this is really why the markets are happy. The fact that some of this data is looking like, well, now we don't have to boost rates. And then if we don't boost rates, that's going to be a good outcome for all the markets. In response to the inflation data, Bitcoin reacted positively, hitting 64K before it had a slight retracement. Well, this leads me into this video right here. Speaking of inflation, when I was a kid, I know I sound old. I sound like one of the olds. When I was a kid, I never worried about inflation. I was thinking of examples with some coworkers this morning. A soda was 50 cents when I was in second grade. Fast forward to 10th grade, a soda is still 50 cents. When I go to the ice cream truck, you know what I liked at the ice cream truck, TJ?
What's that?
I like the Ninja Turtles.
Heck yeah.
Yeah, with a little gumball for the nose.
That's a winner right there.
That thing was always $1.
Yeah.
When I was 7, it was $1. When I was 10, it was $1. I probably quit buying them around middle school. But you know what?
Sure
when I was 13, still was $1. Well, look at this. Kids today, that's not the world that they're growing up in. Kids today are actually feeling the pain of inflation. Let's watch this little kid.
Just say 9 quid. Did Leo pull this video?
9 quid for 2 ice creams.
Girls, what's just happened?
Lost sounds, no sound, no sound. They're saying no sound. Let me hit the refresh. That's unfortunate, everybody. We just did it. We just checked.
It is pretty funny sound, too. You got to hear it.
Yeah, you got to hear the
sound
accent,
is where it's at.
No, he ain't, is it?
No, he ain't.
That's well bad, isn't
You
it?
should know. And he only does bloody card. Stood there with my cash. Bloody hell.
That's well bad, isn't it?
Bloody well bad.
Yeah.
Yeah,
Bloody hell. Bloody hell. You can't even be mad at your 4th grade child if they're saying bloody hell when they're talking about inflation. If I had a kid and they came up to me complaining about the cost of chocolate milk at school and they dropped an F-bomb, I'm going to salute my son on that day. I'm going to say, you know what? You get a raise in your allowance. You are feeling the pains of inflation, everybody. So I'm saying, the accent was really the takeaway there. What are your thoughts about kids feeling the pain of inflation? That doesn't seem like a good world for us to grow up in.
No, and really, like you said, when we were kids, our parents used to say, "Oh, Coke was a nickel or it was a dime," and we think like, "Okay, yeah, sure, old man." But today,
shut up, Grandpa, and then you skateboard away.
Yeah, but today, I think what we're seeing, obviously, is you can look at it on a chart and on data, but in your real life too, the inflation rate is getting exponentially greater. So, the thing that really struck for me, you used the ice cream example, was dollar menus at fast food, and then they changed them to value menus. And it was like, okay, you could get a double cheeseburger for 99 cents, and then all of a sudden it was $1.49. Now it's $2. It's like fast food. You spend $40 at Chick-fil-A for 2 people. Sometimes it's crazy. So that's, you see it there. You see it in gas. You see it in housing. But that's what was interesting about the CPI stuff. Who in the chat, who can tell me what key metric they pulled out of this CPI data that would have made it come in much differently than what it did today? I want to see who knows. There was a key thing that all Americans consume on almost a daily basis that went up 76% since the last report, and they pulled it out of these CPI. It's no longer in the basket of goods.
Yeah, I saw that they took a couple things out. Now, I'm going to throw out a guess. I want Chad to have a couple seconds to guess here, but I remember one of them, I might be wrong here. Was it coffee?
Yeah, C90 for the win. Put it in there. Coffee. So coffee, which is, again, it's not shelter, it's not housing, but it's in there. It's like fuel, right? It's gas. It's something that all Americans consume. And if you're trying to measure inflation across America, and then something goes up 70+% and you pull it out, how intellectually honest are you actually being with these numbers? So that's, again, that's why I don't put too much weight on CPI. It's relevant. It obviously affects the markets. Seeing the numbers come in good today sent us soaring.
But it's 1984 data. It's finagled, it's massaged, it's tweaked, and then at the end of the day, you just get a printout with one line that says 3.4%, and you're like, is that bad? Is that good? What are you taking out? What are you weighting more? What are you weighting less? Oh, no more coffee. Oh, less fuel, more fuel. Rinse more, rinse less. It changes month over month. Toothbrushes. Now toothbrushes are 17% of the index. Sure, whatever you say, Jerome Powell. Coffee. A lot of people. I didn't look at chat.
Yeah.
I was looking this way. Chat's over there. Come on. Don't try to play me here.
Either way, even with that metric removed, if you look at this stat of the, basically the core inflation, this chart that I've got here since 2021, we're basically at the lowest point we've been in 3 years. So you see 2020, we were here, huge run up. This is all the money we printed in 2020. That inflation got felt in 2021. It was getting out of control inflation. They've been trying to get it back under control for the last few years with the tightening. They are, you could argue this is heading in the right direction, lowest for 3 years. But I would say just be careful. This, to me, feels like what's going to be a rubber band snap. I think we've got some other data to look at a little bit later from Marty Party. We know what happened in the 70s when stuff started to happen, and then we had runaway inflation a lot in the 80s. I have a feeling we're going to get a little bit of a reprieve, and then we're going to try to print our way out of this debt bubble cycle again, and we're going to do it all over again, which is why it's critical, why you need to hold Bitcoin, why you need to hold assets that have a fixed or set supply or really hard assets, because when this inflation takes off, the only way you're going to be able to protect yourself from it, real estate, Bitcoin, things like that.
You know what? I'm going to hoard some coffee beans, everybody. And let's all take a little sip of coffee. This is a sip against the man here. Let's all do it together.
Coffee and GameStop. Let's go.
Hit that like button if you felt the power.
I don't have coffee. But.
You know what? You have caffeine.
Yeah.
You have bean juice derivatives.
Yeah. Maybe they'll swap and add the price of energy drinks in there, and they'll just lump it in with energy.
Yeah, it's going to be Monster drinks are 17% of the index in 2029. Yeah. All right, well, we got 5. I think it's actually 4. Caleb, I'm going to hit refresh just in case he added the 5th one at the 11th hour. These are the 5 most important CPI charts, maybe 4, to understand. We love Caleb Franzen. Very, very smart guy. A lot of smart people follow this man. If you're into financial newsletters, I highly recommend check out Caleb's newsletter there. But here are the charts. First one. Headline CPI less energy inflation, 3.4% year over year, down from 3.6%. By definition, that is disinflation. Disinflation, still inflating, but now inflating at a lower rate, similar to Bitcoin. I prefer this metric to core CPI because it still includes food prices. It's still elevated, but it is making progress. Look at that nice sharp downturn. So that is, a little bit of reprieve that was very much needed. Number 2, shelter component had inflation 5.5% year over year in April. I bet a lot of viewers at home are feeling this. Did you buy a new home and your mortgage rates are much higher? Are you trying to rent a home? Are you seeing what these rent costs are doing? These rent costs are skyrocketing, folks. But technically, it is down from March. March, 5.6%, April, 5.5%. Considering this is more than a third of the headline CPI basket and 41% of core CPI, it's key that this continues to experience disinflation. My expectation is it will continue for the next year or so. So we'll probably continue to see this still inflate, but just lower its rate of inflation.
Here's my prediction on this stuff, because shelter is such a key component. We've seen it run away and get out of control in places like Canada. This is where I think you're going to see over time. I don't know. We'll see what happens with this next election cycle, but where they really start to subsidize, the government will start subsidizing U.S. homeowner costs, whether it's a tax credit, if you guys remember back in 2008, I think it was an $8,000 tax credit to anybody who bought a new home during that time. They were trying to get the real estate market going again. I think you will see these numbers continue. They need to go down, and I think they can maybe get them going down in the short term, but in the long term, it will rubber band. And again, the government's going to have to. There's reasons they're talking about things like printing money, helicopter money, UBI, subsidizing housing. I think they're going to try to do that to keep this under control, because there's Eric Carlson mentioned true inflation based on the calculation methods they used in the 70s. We're at 9% inflation, not 3%. And so they can only do this math gymnastics for so long until people literally it's like, I don't care what your chart says. I can't afford my housing. What are you going to do?
Yeah, it turns into the Hunger Games where the person on the TV telling you everything is fine and your stomach is growling.
Right.
And you're like, I just know that there's a disconnect here. $5 from JJ. EU new law can take your crypto for no reason. Government can now compel you to only use the dollar. CPI lie. It's missing real information. That is key right there. It is missing tons and tons of information. And the information that is in there is manipulated.
Now, JJ, if you can follow up with that, is that a law? Has that been passed or is it proposed? Is it a bill that they're trying to get passed or is that actually in? Because I think
that's the thing that passed about 10 days, 2 weeks ago, if I'm not mistaken there. All right. Third thing we're looking at here is excluding shelter inflation. So now, we don't have the rent in there. We've seen what rent's doing. We've seen what the shelter is doing. So now we exclude shelter. We still have 2.2% year over year, but yet again, it is down from the month prior. Last month, 2.3, today, 2.2%. This is a modest but necessary deceleration. It tells us that the other components within the CPI are experiencing an inflation rate of 2.2% year over year. Services less rent of shelter inflation. So think about the way, going to a restaurant, getting your car washed, continue to also accelerate. This one is 4.9%. The one that is going above last month's at 4.8. So this isn't what the Fed wants to see. In my opinion, this is the biggest concern within the CPI data. This is going to be the job market, as we can't pay people enough money to do the job that we want to pay them for. And then, that was for disinflation forces made a comeback in April, but still valid concern about the services inflation. The weight of that evidence is disinflation incurred there. So that is Caleb's breakdown. Really good breakdown there.
Yeah, love Caleb Franzen. He does a really, and if you guys are looking for good macro analysis, Caleb Franzen, another kind of really like TED, I think it's TED Talks Macro or something like that. It's the one I pulled his chart up earlier. Great people to keep an eye on there.
If you had to do a TED Talk today, what would you do it on? It can't be crypto. Plot twist.
It can't be crypto.
It can't be crypto.
Well, that you just pulled the rug on me there. Let me think.
Black t-shirts.
TED Talk.
It's gonna be black tees.
It would be on what you focus on expands. That's one of the things I like to live by.
Would you focus on
expands?
Well, like my waistline. What are we talking about?
If you're focused on it.
Oh, what you're focused on, comma expands. Okay,
yes.
I like that. That's
one
good.
of my favorite. You could say that's manifestation, that's framing, it's visualization.
It's the filter technique too.
Yeah, it's all it's the kind of core stuff, but it's something that I really.
Here's the best example of that I've ever heard. Now, I know we're on a little side here. This is from the really tall guy with the big face that claps weird. I forget his name. He's in Shallow Hal. Look around this room, TJ, and you see all these things. Okay, now close your eyes and think of everything that was red.
Right.
And then open them again. And you're like, oh wow, look at all these red things. And then close them again, and they say, well, now it's blue. And you're like, oh crap. And so when you're looking for red things, you're going to see red things everywhere. But then, so it's just the filter that you put on the world. You look for happiness, you'll find happiness,
folks. Right. You focus on positive, you get positive. You focus on negative,
that. That's good. That's a good TED Talk. I'd stick around for that one. All right, let's play this from CNBC. It's only 30 seconds here. Talking about inflation in April. April's year over year hit 3.4%. 37th consecutive month above the Fed's target of 2.0.
Now let's go to CPI, shall we? These are the April reads, of course. Headline up 0.3, a little
Tony
cooler
Robbins.
than the rearview mirror, which was up 0.4. I haven't seen revisions. They were late yesterday in coming. If we look at the ex-food and energy, also up 0.3, and last month that was also up 0.4. So that definitely cooling off as expected on that. Now, let's look at the year-over-year numbers, probably the most important. 3.4 is the year-over-year headline, and that is 1/10 cooler than the rearview mirror, equal to expectations. Now,
cooler than the rearview mirror was expecting, everybody. You can see here core inflation hit that 3-year low. That was the chart that TJ was pulling up here. And here's a really good breakdown from Marty Party. This is what TJ was referring to earlier. What happens now? So now we're going to tell you what happens. And now we got this data. This is Marty Party's prediction, and I'll say, I'm largely agreeing. I think TJ is as well.
Yep.
The U.S. government will apply the same strategy as the 40s and 80s and attempt to inflate the debt away. Inflationary environment is coming as debt is monetized. We will go through massive inflationary boom. We can't decouple from gold again. because we already did it, baby. And what they can do is monetize the debt via quantitative easing and money printing. So we have a lot of debt. What can they do? Well, they can print a bunch of money. I estimate 30 trillion of U.S. government debt will be bought. This retires this debt, i.e., it vanishes. A massive inflationary spike will happen as that new money goes into the system, but will result in massive deleveraging. We're not going to see that new money hit the system immediately. Think about COVID stimmy checks. You end up seeing inflation really hit a year or two later. Remember, this changes the valuation of assets and investing, changes the valuation of assets like Bitcoin. They are no longer valued on fundamentals, but purely to protect the value of investment from debasement. Now, money doesn't care about profits, doesn't care about value, doesn't care about what the valuation is, doesn't care about earnings per share. Money cares about protecting itself when there's an entity just eroding it constantly, aka the money printing machine, aka the Fed. This will happen to assets first. Buy assets without adjustable debt, preferably no debt. Other things you can do. Get rid of adjustable debt. It's going to start skyrocketing, folks. That's what he's saying here. Get rid of your bad mortgages. Use fixed rate debt to buy assets that pay for the debt and get a sales job. Your commission goes up as inflation raises the product price. I love that part right there.
That is actually a really interesting one. It's something
I've never thought about that either.
I thought it hit me. I realized that because my background was in real estate. Obviously, you're paid commission based on the underlying asset. The underlying asset goes up with inflation.
Yeah.
So, or if you think about stockbrokers or anything.
Dude, think about car dealers 2 years ago. Woo, they were making a killing when they couldn't keep vehicles in stock. Jeeps were 100K plus. And those salesmen, the cars jump up, they double in price, triple in price. Well, so did their commissions.
6% has been the general commission for real estate sales across the country for a long time. And we know, you go back and look, real estate has gone up exponentially in that time. And that's when I realized, part of the reason stockbrokers and real estate agents and some of these professions seem to do so well is because they're almost inflation proof. Their income does adjust with inflation where many other ones don't. So that actually is a really good hack there. Or, the last piece you could say in there is obviously buy Bitcoin or, Bitcoin based businesses. Again, anything that's built on an underlying asset going up, it kind of is an inflation hedge for you. So,
someone has a good question. I'm going to skip ahead a little bit. Who buys the debt? Who's buying the debt? Who's going to buy these junk bonds? Well, Paul Ryan had a comment on stable coins on Bloomberg last Friday. Extremely important for a few reasons here.
I guess the question is, what could you do now, knowing we have debt problems in the future? I think there's a couple of things Congress could do. They're not, but maybe they'll get something done. I think stablecoin legislation would be a good step in the right direction.
Unprompted brings up stablecoins.
That could be helpful. That could be done this year, but I don't see anything other than that on the horizon.
Let's talk about stablecoin, because I've heard you say that actually getting legislation on that could help treasury auctions. And when you said it, I said,
treasury auctions are the debt. That's the debt. So you're wondering, who's buying this debt? Stablecoins help that little auction. Think of an auction. You got Japan over here. You got, CIA cutouts over there. You got, some sort of hedge fund over here. Someone has to buy this money that's being printed because they turned into a debt. Then they try to sell that debt.
When you hear the word treasury, think debt, and it's generally being bought by nations. Nations are all buying each other's debt. But I do think this stablecoin play is fascinating.
Take our audience through that connection.
Yeah, so stable coins, which are digital private sector dollar-backed currencies. It's not crypto because it's tethered to the U.S. dollar. They have to have dollar-backed.
All right, they're saying it sounds a little low, so we'll cut it off right there. But this was something we were talking about weeks ago because I saw this Mike Benz post. I don't remember. Okay, May 1st. So this was right at 2 weeks ago. He predicted this, or he says stablecoins will be used as a secret backdoor for the Federal Reserve to prop the U.S. dollar using tether treasury buys. Now this is not substantiated. I haven't seen any evidence of this, but he's essentially saying tether has been captured by the Fed. They're using these record-breaking billions in profit and using these billions in profit plus the billions of tether being created to mass buy treasury bills that help support the U.S. dollar.
It's true. I mean, if you look, and I'm sure USDC is in the same boat. You've got Tether and USDC holding a lot of U.S. treasuries, and it's a way we've talked about this a lot in the past on this channel. The way they used to find liquidity for the dollar was to go, we don't want to say, we'll just say they were forcing it on people that may or may not wanted it. They would go into another economy that was using something other than the dollar, take it over. Okay, boom, you're using the dollar now because we need more demand for the dollar. It's all supply and demand. So what's the best way to get instant global demand for the dollar? Hey, we've got these stable coins everywhere. Now, as long as they're backed by the dollar or tied to the dollar and they're holding a lot of treasuries, that's where Operation, what was it?
Paperclip. No, don't look that up.
No, it was Choke Point, Operation Choke Point, that they were doing very much on all the exchanges, on all the on and off ramps, and it really much has to do. You hear them talking about stablecoin regulation a lot in Washington. It's because they know this is the number one way they can keep demand on the dollar and keep printing the dollar, and it doesn't have runaway inflation because now instantly, people can be holding dollars. Real quick though, before we
go, that's the key.
Instant. Yeah. You don't have to destabilize the government. You don't have to implement a new leader.
Hey, Tether, print.
Yeah,
okay,
exactly. Well, and hey, person in Bangladesh, open up your wallet, buy free USDT, and you now hold dollars.
Yeah.
It was immediate. But real quick, I wanted to give a shout out, Kelly Kellum in the chat from BitLab Academy, guys. I know most of you guys in here are really well versed in crypto, but if you're new to this space and you want to be prepared for the future, Bitcoin and blockchain are the future. Are you prepared? Go check out BitLab Academy. I don't know if you can see that. There it is. Kelly does a really good job running that. He's in Las Vegas right now, doing a really good job, doing a lot of good work. So most of you guys are in there, I know, but I just wanted to give them that quick shout out, as well as Arculus, our number one sponsor. Love them. Great product. If you guys haven't secured your crypto assets with a hardware wallet, Arculus wallet is one of the best ones out there. They're one of the most secures, 3FA. Go do your research, guys. We always tell people to do their research. We know other wallets like Ledger have had some compromises in the past, some potential backdoors. This one is about as secure as it gets. Its parent company is Compo Secure. It's publicly traded. Basically, all of the technology that banks and everybody uses to secure Visa cards and Amex Black cards and all that kind of stuff has been done and created by this company. It's one of the best hardware wallets in the game. I really enjoy it. It gives you peace of mind, and it actually works really well if you want to use a hardware wallet and still transact from it. It's one of the easiest interfaces.
Man, if only there's a way to get a discount on it, though.
Oh, yeah. Well, hey, if you want a discount, just go over to there and use that DC10. You get 10% off.
Oh. That's nice.
Just
very nice. Speaking of very nice, someone had a nice comment. Mike Benz is DZ's cousin, according to Techno Goody. What do you say, folks? I don't know.
I don't think so.
No.
He's just
Yeah, we just have similar follicles,
just got the same hairstyle.
On the rear side. All right, the back of my head, that's what I'm talking about. Mario Party, he has some predictions for Bitcoin, what's going to happen here. May 28th through the June 1st. So, we're, very, very short window here. This is the end of the 90-day halving consolidation. Also, we're trying to predict here with this 200 and 800 EMA. This is when it'll touch or get close. I mean, when they're this big, you can kind of predict that. So, more than likely, 200 AMA are going to touch or get close. This is what also happens when liquidity runs out. This is also when Bitcoin will be publicly declared unbanned by China. Too much is lining up. These are my theories. So he's saying we're going to get a huge run up, but wait, there's going to be a V-shaped dive led by Binance before the run up, but 2 weeks is not that far off. So AKA, they're going to have to wash out all the leverage longs with a nice little capitulation spike, a nice little scam wick to the downside. And then he's saying it is up only, everybody. So very, very bullish take.
And that is something we've seen with this range going on in the last 30 days or so. We've seen a lot of over leveraged liquidations on longs at that level. And then people try to short, they get wiped out. But I do think this date is key. Kind of end of May, beginning of June. We start to get moving, and then July, I'm hearing a lot of good stuff about memes popping off again, and this whole new cycle coming in June and July. So I would say buckle up. We've been ranging for a while, but we've got some more fireworks coming down the pike.
Buckle up, Buttercup, because you know what? There's some old Bitcoin wallets on the move, everybody. I didn't know it was this few. I don't know what your thoughts are here. 32 vintage wallets sprung to life in May, surpassing April's activity, not in wallets, but in dollar amount. And last month, just 72 transfers from idle wallets. And I'm not talking about 2010 to 2012. This is 2010 to 2017. These are, for sure, older wallets. But 2017 wallet, I don't really think of being that old.
No.
And only 72 transfers from wallets that age. What are your thoughts on only 72 transfers for the entire month? We're running out of these old wallets a lot sooner than I thought.
Yeah, it is. It's very interesting. A lot of times, obviously, you need to perk up when you hear about really, really old Bitcoin wallets moving stuff around. There's really not a lot of reason for them to move stuff other than sell or transfer. Now, I don't know. I would bet that this might be a result of a lot of the illiquidity in Bitcoin, like the demand for Bitcoin right now. These are probably OTC sales, if I had to guess. Old whales selling to people like Coinbase and some of those kind of places. I don't know. It's pretty interesting. You definitely want to keep an eye on it. This could be some of that flush out they were talking about. I mean, keep an eye on these wallets because this is a lot of Bitcoin, and anytime it's really old and we're getting up to these prices, they probably are selling either OTC, selling to exchanges, selling to again BlackRock. There's a huge demand on clean new Bitcoin right now. So, with the halving, you're not getting it from miners anymore. You got to go to the old whales that have it. So,
well, some other crazy stats from this 2010 to 2009 era here. In 2009, first year of Bitcoin's creation here, 21,000 wallets. And so what are these wallets? These are the idle wallets. So we have 64,000 total idle wallets. And now remember, last month, only 72 of them made a move. This month, only 32. So 64,000. We dig deeper, just 2009, 21,000 of these wallets, and 12,000 just from 2010. So of the 64 from this 7-year period, what are we looking at? 33,000 of them are just from a 2-year period. So more than half just from the first 2 years of Bitcoin. So TJ, my question to you is, of the 21,000 wallets, what percentage just lost forever? They lost the keys.
21,000 wallets. What percentage? Hard to say.
Maybe
5-10%.
Yeah, I'm thinking maybe double digits.
Yeah,
which is pretty high.
Higher. Yeah, because back then people didn't secure it. It wasn't, it was worthless. And then the price goes up and like, oh, where did it go? I got to go find it. So, yeah, there's definitely a lot of Bitcoin that has been lost in circulation from that regard. Shit. Nice to see you too, Enzo.
All right. A lot of good people. Yeah, so these mystery whales is just pretty interesting. The age of some of these wallets, they look at this wallet, how he got 50, then only did 5 transactions, then they take a break, 10 years ago, and then all of a sudden, you see them moving, just, something to pay attention to. Well, Michael Saylor saying we're going to need more of these ancient wallets to awaken from their slumber, because pension funds will need some Bitcoin. That's right. We just got a pension fund joining in, and it was the State of Wisconsin Investment Board. And they have acquired $99 million of the BlackRock ETF, the IBIT ETF shares there.
Yeah. This is interesting. I mean, obviously, we know pensions are going to be moving into these ETFs over time. Generally, they wait much longer. This is a pretty new ETF. I was looking at some stats. Generally, they wait at least a year before we start to see some of this stuff. But any smart asset money manager can see what's coming. There is inflation coming. What can you do to protect yourself from inflation? What is an inflation hedge? And Bitcoin is getting more and more clear that not only is it an inflation hedge, it's one of the best plays you can make with your portfolio right now. So it's going to be almost mandatory for asset managers to be allocating at least a couple percent, a small percentage, a decent percentage. I mean, that's what's been fascinating. We've seen, I wanted to say this was, I don't know if it was this one, but it might have been like 10 to 13% of the fund that went in here. People are definitely YOLOing into Bitcoin right now.
And what does that look like? What does that landscape look like of these pension funds? Well, Bitcoin Archive, talks about this. It's only 162 million, but he has a take here. It's only a matter of time before every single state pension fund does make the same move. And then every university endowment, and then every family office, then every wealth manager, then every fund manager, every corporate treasury is the final boss there. And so in perspective, we're looking at $24 trillion in assets, aka 2 BlackRocks. And when you see what percentage the IBIT ETF is to BlackRock, is like 0 point, and then a whole bunch of more zeros. It's a very, very small percentage of their entire portfolio. When you start looking at trillions, And you're talking about, 100 million flowed in. We're talking about very, very small amounts there, folks.
Yeah, and this is what is really true big institutional money. This is what we've been talking about for a long time. This is why the ETF is a big deal, because it's easy for these type of asset managers and funds to get exposure to Bitcoin. This is the type of stuff that, again, the effect of this ETF will be felt over the next 12 to 16 to 20 months because of things like this. Old money, big money, doesn't move fast, but it moves very deliberately. And when it does, it makes a big splash. So,
speaking of big splash, look at weekend roasts right there. I don't know if you can read that.
Folks in Wisconsin,
I lost 7,000 towards the top there.
Oh, let me see.
Up 3, up 1.
Weekend roast. I lost 7,000 BTC in my wallet in 2012. Well, glad you're still with us. Glad you're still functioning.
Here,
That would be brutal. That would be brutal.
Yeah.
But I'm sure you've learned a lot along the way. If you had 7,000 Bitcoin back in 2012, we probably know why. But you've been on the edge of the internet for quite some time. I'm sure you've learned a lot along the way. So
he was just buying software that was like hard to buy.
yeah,
That's all he was
exactly.
doing. Yeah, he was nothing crazy, folks. Nothing crazy.
Yeah.
All right. Vanguard has vowed. So remember when Vanguard fired? They had a CEO saying, we'll never have ETFs, and they fired him like after the ETFs were super successful. Well, they did hire somebody. Vanguard has now rehired a CEO. Who they get? The guy who did the Bitcoin ETFs for BlackRock. And so this is kind of odd. Normally they hire insiders, according to Eric Balchunas. So first time Vanguard ever hired an outsider as a CEO. Makes me feel like, when you see, is it all, excuse my language here, or the colorful language, is it all circle jerk, with these Wall Street executive types? It certainly looks like that, folks.
It is, but what's fascinating about this is, remember, when the ETF first launched, Vanguard was very against it. They advised all their clients not to do it. They basically said, we don't care if our clients are asking for it. We're not going to allow them to have access to this. You see this move, and it makes a lot more sense. Maybe they're trying to launch their own fund, and they don't want all of they've got enough money, too, where they could spin up their own and push their own assets into theirs, keep the money. So that could get fascinating as well.
It'd be like a new BTC ETF application.
Yeah, I mean, there's 9 or 10 of them. I mean, they're obviously a lot of them doing very well, but Vanguard is the other Goliath in the room.
Yeah, Vanguard's like BlackRock Jr. almost, or almost like a
They're
cousin.
like BlackRock brother.
Yeah, brother even.
BlackRock. But Gary the Lizard's asking DZ any trading on the show
Well,
today?
let's go back to the Blofin trade. Have we hit 600? No, we're above 500. It's $530. I think I am now at the point I can go ahead and move the stop loss right here. So it's kind of hard to see. You can see it right there, 525 in profit. We're up about 80% right now. I have the stop loss roughly 50% area here. So, I'm guaranteed to make around 270 or so. Let's go ahead and make that about at least about 380, 420-ish there. So I'm going to go ahead and move the stop loss. I don't want to get wicked out. I want to make sure, maybe come in a little bit below the top of these wicks. I don't want to go in so low as to be below this wick, but I want to be below these wicks. So that way, if it wicks down and then goes up for another leg, similar to that, look at that little scam wick there. That scam wick tried to get you out of the trade right there, didn't it? I was below it. Look right there, another little scam wick trying to get you out of the trade. And so that's why I'm coming in. Now I'm like talking to myself in a little bit lower there. There we go. And so, I want to keep this trade open. I am very long-term bullish on Doge, everybody. And this is Blofin. We have a link. You can use it in the good old US of A. That's why I like using it here. We have Kathy Wood, their ARK ETF. Speaking of ETFs, just got $133 million in inflows. This is the highest we've seen since the bullish month of March. Some are saying, hey, we are back. But when your name's Bitcoin Magazine, I would say maybe you're biased. All right, signed into law, the right to buy, sell, transact, self-custody, and mine Bitcoin been enshrined into Oklahoma law. So big shout out for a big victory for the Oklahoma Bitcoin Association.
Well, and this is actually a big victory, in my opinion, for everybody in the United States that's in crypto, Bitcoin, blockchain. This is something that I think is very, very key and important as time goes on. We need to push state laws. We need a lot of states to make their own laws and regulation around Bitcoin, and then that will float up to federal versus the other way around. If we wait for the federal government to put their regulations in place, it will not be favorable. It will take too long. But I think states get it. States like Wyoming, states like Florida, states like Oklahoma understand where things are going. They care about their citizens. They want to protect the people within their state. So I think states' rights is the best way to enable and when it starts at the state level and floats up to the federal level, I think that's the way we need to be doing this. So if you guys are in any of those states, pushing, being active, and encouraging things like this is critical, I would say, in the long term. The way they handle stablecoins, the way they handle especially Bitcoin custody, we're going to see that under attack over the next few years, in my opinion. We're going to see them wanting all Bitcoin held by regulated custodians like Coinbase. They're not going to want an individual to hold their own. I don't know how long. I don't know if that's a 2-year play. I don't know if that's a 5-year play. I don't know if it's a 10-year thing. But I do think, just like with gold, they wanted the vast majority out of the hands of the citizens. Bitcoin is going to be no different.
All right. Now, you're talking about states. We have 2 states, probably known as the financial capitals for America. We got California, we got New York City. Both of those states have a record number of millionaires living in a certain city. New York, it's easy to guess which city.
Right, New York City.
What city in California has the world's second highest amount of millionaires? Chat, get a guess in. What city in California has the world's second highest amount of millionaires?
And I'll give you a clue. Where does a lot of the new money, new capital flow? Where are the tech startups?
Not my meme coin wallet.
No. But where are tech startups? Where did Facebook come from? Where did Uber come from? That's your clue.
There you go, folks. I actually would have thought, we got a Techno Goodie coming in first. I would have thought L.A. If you just would have asked me, all right, New York has the most amount of millionaires. What city has number 2? It's L.A., right? It's a numbers thing. It's a math thing. Hollywood.
I think because New York City and L.A. are so tied together with entertainment and all that sort of stuff. But no, I mean, you guys are getting it. San Francisco, because if you think about it, that's where investors are. That's where all the venture capital is. Silicon Valley, base. I think they call it the Bay Area, which I think kind of cheats, in my opinion.
Yeah, because
if you expand outside of New York City, who knows what the numbers do there.
Yeah,
too,
there's probably a handful in Oakland, like a couple Raiders who haven't moved yet.
Right.
They're like, I need to get out of here. All right. Well, New York City now has almost 350,000 millionaires, more than any city in the world. The number of millionaires in New York City has risen by almost 50% in the last decade. Meanwhile, the Bay Area has risen 82% to the second highest worldwide, 305,000, mostly driven by the massive rally in financial markets and real estate prices. So a lot of people millionaire on paper because of their home. I think that's the real reason we're seeing the Bay Area rise. You just got a lot of older people, houses paid off, and they're like, oh, wow, our house is worth $1.4 million. I don't have much in the bank, but my house is worth $1.4 million.
But you weren't far off. I mean, LA is not too far behind. There's like, what, 6th, 7th on the list right there?
Yeah, you can see it right there. So number 3, Tokyo, Singapore, London. I expect Singapore to climb and climb as Singapore real estate goes higher. London, Los Angeles, Paris, Sydney, Hong Kong, and Beijing. Here you can see the 2013 to 23% change. Number 1, Beijing getting the most, followed by the Bay Area. The worst loser, the biggest stinker, London. London is actually losing millionaires. I not would have guessed that given inflation here, but the rich are getting richer at the fastest pace ever. I think it's going to happen with the inflated currency there.
Dang, Bitcoin above 65 now.
Oh, wow.
I haven't seen 65. I mean, that's so crazy the way time works in crypto. If you think about it, like it felt like, man, if you haven't seen 65 in forever, and then you go look at the chart and like, okay, it was actually just like, it was at 70 like 60 days ago, but it feels, that 60 days feels like forever.
And not only that, you think about how bearish you were 6 days ago at the same price, and now you're like, wee! All right, here we're looking at the Bitcoin chart. This is on the 3-day, and folks, I'm not even lying. This thing is playing out exactly how we predicted it here. We said we're going to go below, test the bottom of the channel. We're going to go up. We're going to bounce off of it, and then use it as support. Now, in typical DZ fashion, I was a little bit too bullish. It happened a little less strong, and it happened literally just 1 day later. And so I was 1 day off, and I was a little too bullish there. But yeah, I predicted this about as good as you can get there. Did I long Bitcoin? No, I long Doge, but we're doing pretty good anyways here. I am interested in see what Lux Algo indicator. Big shout out. Yeah, this bullish divergence on the daily is playing out. This is one of the reasons I said it's going to do this. Typically, we see bullish divergence play out with one more little test, and then we go off to the races there. It looks like money flow may be heading into the green here. So we want to see that money flow head back into the green. The ETFs are going to help fuel that. Speaking of fuel, people are using Venezuelan money as fire kindling here and just using it as trash. Fiat in Venezuela is so worthless, people are now throwing it out with the garbage. That is ridiculous, folks. Now this one you should be able to hear. It seems like a little bit louder volume. Not really saying much anyways there. But yeah, that's it reminds me of the Bitcoin conference in 2021. They had all that money just floating around.
Worthless paper.
UK law, ECCTA, take your crypto, Cointelegraph story. Okay, so breaking news. All right.
Maybe you pull that up a little bit later on the other stream or something. That is
I might, I can wrap it up with that for sure. We got Poly Market getting some serious funds here. Looks like two very smart billionaires, Vitalik and Peter Thiel, are both betting Poly Market as $125 million worth of election bets start to accumulate here. There is no way to buy the token, and now that Thiel and Biederin are in, now I feel like it's less likely to have a token. So I wouldn't say, bet on Poly Market and you're going to get the bet token airdrop in 11 months. Now I don't know if they'll do an airdrop there, but you know what? It's a great product. Rooting on this, and
fun.
It's probably the best thing to do on Polygon. If I go ahead and be frank there, I don't know what else people are really doing on Polygon there.
I've noticed a lot of people getting, I wouldn't say hardcore bearish on Polygon, but bored with Polygon. Everybody wanting to move to new hot coins. I'll be real interested to see when the bull run starts happening. If generally we do see the narrative matters. Like you have to be with the latest narrative. The newest coins tend to move the most. Some of Matic very relevant in the ETH layer 2 space, but as things like Base and Arbitrum and Optimism, and there's all these other things that are able to bridge and use for the layer 2s. How much does Matic continue to rise versus just the hot, shiny new coin? That's something I'm asking myself all the time. New project, old project. Do you just cycle out of all old projects? Excluding maybe Bitcoin. I even have this discussion with Ethereum and Cardano. Like, do you cycle out of old projects just because they're old to get some exposure to the new stuff, even if you want to roll it back into the old stuff long term? It's always a tough decision to make. I know you love Cardano. I like Cardano as well, but that's one of those ones too where it's like, man, had we pulled more out of Cardano and put it in some of this hot new stuff and then let it pumped and then done something else with it later,
Speaking of pulling out of Cardano, I'm just going to pour one out for the Ape Society here. I don't know if we can go wide shot for me real quick, BJ. I don't want to spill on my lap here. 3, 2, 1. Give him the countdown. Then he has the pressure. Now he's zooming in.
There it is.
Yeah, this is for the Ape Society. We just got to pour out a little bit. It looks like they're moving off of Cardano onto Base there. A couple questions. Well, this one's nuts. $1 in the U.S. in Venezuelan bolivars. 3.6 million. That's 3.6 million. And Josh is on the way to his bachelor party.
And Alexander G just asking, have you hit the like button? Yeah, we've got about 1,000 people in the chat. Only 200 likes. I know today, come on, price is pumping. Everybody's in a good mood. We can definitely get over 300 likes today. I'm thinking 350, no problem. So if you guys wouldn't mind, take a second, stop what you're doing, hit that like button. If you're watching on mobile, you have to close the chat, hit the like, reopen it.
DZ, does that smell like vodka? It's a triple. It's a triple. Ask TJ. He knows about the triples there. All right. ETH Bitcoin ratio falling 30% year over year amidst rising Bitcoin market dominance.
Oh, here we go.
I could hear Ben Cowan on my shoulder saying, I told you Bitcoin dominance is going to rise. So the ETH ratio recently hit 0.046. I pulled it up on the charts, folks. I'm really going to read this. The downward trajectory highlights the struggle against Bitcoin's dominance. Really, I'm going to tell you what's happening. The markets are pricing in ETF rejection here. So I think that's really what we're seeing here. I pulled up the chart. This is the second longest trend line in crypto that I found. I found the longest trend line. I found the second longest trend line. I've seen no one else talk about these trend lines. This is ETH Bitcoin dating back to 2015. You can see very, very strong support turn into resistance for a bit and then flip back into support. Right now, folks, we're at the freaking danger zone, man. I mean, we are at the danger zone. If we go to the 4-hour chart, wow, look how cleanly that is just wicking off of that there, TJ. So let me just give you a warning, like it's Kevin's chili. We gotta count this as support, folks. I'm still leaning this is support, but if it breaks, I got the target for you, folks. So right now, ETH Bitcoin. So it looks like every ETH is roughly 4.6% of a Bitcoin there. Pretty good. I like that. All right, well, now let's go. This is the next target. I think it would look something like this. I think it would be this trend line playing out, and that puts us all the way down to like right at 4%. And so if it takes, a few weeks to get there, few months there, happens towards the later part of the year, ETH hitting 4% of a Bitcoin. So, I mean, it doesn't seem like that much. This would be devastating for altcoins. We do not want this to happen. We want this to act as support.
And I do think part of this is people are pricing in the ETH ETF being rejected or delayed. I do think that is probably most likely at this point. I mean, I don't know if they say there's 60% chance, but my opinion, I think it will be rejected. Lawsuits will happen. Maybe something happens in the future, but I don't see it going through in the short term. So I think that's getting priced in. A couple of questions from the chat real quick. Fogue was saying he's debating to dive into Base or Solana. Thoughts? Yes, I'd say go ahead and dive in. You get in, play with it, learn about it. If things move fast there, you can, if you're looking for memes and playing with fun stuff, be careful. You can definitely lose on a lot of those projects, but that is where a lot of the latest movements are in the space, and rotating into those things as the activity is there is one of the best ways to stay on top of what's relevant within crypto. Base is very clean. The interaction is great. Solana, it's simple from a retail perspective. I think there's some to be desired on a dev and tech perspective if you're trying to do more complex things. But if you're a retail person, definitely should jump into both of those. And then also SDG Fellas.
I pulled it up right here.
TJ said Link. This is actually, if I did, that's not what I meant to say. I was saying Near has better tokenomics than Link. I say they're both strong projects. I said I already have Link, but I'm looking at Near because it has better tokenomics.
One thing, though, a lot of people will point at this. There is technically infinite supply on Near, but so is there for Ethereum.
A lot of them, yeah.
Yeah,
but 99% of it is in circulation. So it's got a emission rate of new Near being put into the system, and there's no hard cap to it. And Chainlink, same thing. I don't think Chainlink basically isn't designed for token go up as much as it is designed for actual network use and that sort of stuff. I like Chainlink to support it for that reason. But if you're doing it from a pure investing standpoint, Near, in my opinion, looks very, very good.
All right. Well, speaking of Solana here, that's going to roll us into our little final story here. Solana, $170 million inflow from other chains reveals a curious truth here. What are they revealing? And so this is from, they're looking at bridges. I want to say they had, okay, here it goes. Wormhole and D-Bridge. So they're actually quantifying like, okay, dollar leaves, Polygon goes into Base. They're looking at all these. And $170 million was moved into Solana from other chains, including Ethereum. So this is very bullish for Solana. So Ethereum, flowed into there, Base flowed into there, and some other ones there. And so this is Ethereum inflows were $36 million, while on Wormhole, 26 from the same period. So yeah, looking at a lot of money flowing into the Solana ecosystem. Then we had Solana generate more economic value than ETH in a single day for the first time in history. So while we saw record low gas fees, meaning basically no one was transacting with Ethereum, meaning the stakers weren't getting a lot of revenue. Solana beat them in revenue. So that's very bullish for Solana. And then we got one more Solana for stablecoin transactions from under $100 all the way up to $1 million. So these are large list of transactions. Solana just kind of taking the cake here. So you still see Binance Smart Chain leading the way. Why? Because it's really, really cheap. You see Tron leading the way. Why? Fast and cheap. And so still a lot of people move things on Tron. A lot of people don't realize, I think it's a little bit of a Western take there, but yeah, people in Asia love Tron for hey, it's fast, it's cheap. Robinhood crypto debuting Solana staking product in Europe as well. It's going to shift its focus to Europe with a series of exclusive updates. So while the SEC, Gary Gensler drags their heels, they get to do all this cool stuff in Europe because they have a little bit more clarity, even though they don't have a whole lot there, though. Folks, that is, you want to read a couple chats here?
Well, I did want to hit a couple altcoins. We'll go through this real quick. I did think this was interesting. We did talk about the ETH ETF. So like TLDR, the SEC asked commentators regarding the ETH spot ETFs whether these filers have properly filed their ETF listing proposal as commodities. This shows the SEC is perhaps considering to ETH is a security in their denial. Our odds of approval remain the same, slim to none. Nice job of SG Johnson finding this. It was literally buried 50 feet deep in the pile of legalese. So that is part of why I see a rejection coming. I did say at the top of the show I would talk about a couple of the projects that I've been messing with recently. They're not exactly new. It is DeFi related, and I think these will remain relevant. I'm sure we've talked about this one on the show before, a long time ago. I know we talked about it on the basement, but Pendle is something I've been playing with recently. That's interesting to me. Obviously, it had a huge run up. It's on a pretty strong retracement. If you look at more of the short term, it's definitely ticking back up. But is that the all? Yeah. So it's been around for a while. It's obviously had a huge move to the upside already. I think it can very easily reclaim all-time high, if not go much higher. So that's one to keep an eye on in the ETH ecosystem. And then also similarly within the same vein, Frax shares is another one. Again, I've mentioned this multiple times. I think even at the top of the last year or beginning of the year, I put this in a portfolio that I showed here on screen. So this one is much better if you look at the all. It's sitting right on support. So if you believe in ETH and DeFi, these are a couple projects I've been keeping my eye on. Frax share, I think somewhat underrated. So they're not micro caps. Pendle's probably in the top 100 at this point. Let's see, where's the rank? One little. Okay, so not quite in the top 100, but I will say if you go in that 100 to 200 range on CoinMarketCap over the course of history, like sure, some micro caps you can hit and have some crazy X on, but largely the coins that if you can pick a solid coin that's between 100 and 200 on CoinMarketCap and put a decent amount of capital in, it doesn't have to be, not talking 100 grand. If you put a couple $1,000s into one of these things, that's where you can see 5,000 turn into 50,000. It's where you can hit very, very clean, 5 to 15 X's in that range or more. But that's where I like to look for some of these mid-range projects, especially as we're getting ready to really rip into the altcoin season as time goes on.
And speaking of rip, I just pulled up Bitcoin on the 1 minute chart just to see, what kind of some of this recent price action looks like. This is from 5:30 in the morning. Look at some of these wicks, man. Look at that right there. That was a 2 minute blast off. I mean, your head was pressing the back of your seat there. Yeah. And it looks like, now we're just trying to flirt with some new levels right now. But look how evenly those wicks are. I mean, I could really, really stretch this down to like the pennies. Let's see, $57.93. $56.05. So we're getting wicks within $1.80 of each other. So the bulls and bears are going to continue to fight. We're going to talk about this at 1:30. Make sure you tune in later. We're going to have a basement stream. It's going to be a great time. And folks, that's all we got.
Yeah, hit that like button on the way out. Enjoy the BitLab Academy. And doesn't everybody love a 2 minute blast off?
Hey, I love it too.
See you guys later.